Welcome and thank you for clicking on the home insurance section of our website here on Colorado Insurance's website. We're very excited to bring you this tutorial video, which is essentially going to break down all of the basic coverages that are going to be on your homeowner's insurance policy. Now, in the state of Colorado, it's a very tough place to insure homes. We have a very high loss ratio here, so there's a lot of variations that I'm going to discuss that you may see between carriers. There's a lot of funky things that are going on in the home insurance business that you need to be aware of when you're shopping for homeowners insurance. So we're going to go through these basic coverages, and of course, if you have any questions whatsoever, you can always contact my fantastic sales team here at Colorado Insurance, and they can answer all of your questions. I'll give you that info at the end of this tutorial, or of course, it's on our website. So let's get started here. The very first coverage that we're going to discuss is going to be your dwelling coverage, your coverage A right here. This is listed differently depending on the carrier that you're with. Like I said, sometimes it's listed as dwelling coverage, sometimes it's your coverage A. Essentially what this is this is how much coverage you have to rebuild your home the way it was. This is going to be everything that's physically attached to your main dwelling. So everything that's physically attached is going to be included in your dwelling coverage. The way that we get this limit is a lot of misconceptions with the general market that we get this through the value of your home, and that's not correct. We actually get this off a price per square foot guideline based on a replacement cost estimator that every insurance company uses. Now, this does not include the basement square footage. This is above ground and up. Now, of course, if you do have a finished basement, we will compensate for that finished space in the dwelling coverage, but it won't be at the same price per square foot guideline. It'll be less because if something were to happen to your home, say it burned to the ground, we don't need to replace the foundation walls of the basement. So it would really be interior dwelling coverage for your basement. But we will compensate for that, and my sales team will consult with you as the client to see what kind of finishes you have, not only in the basement, but in the home itself. That price per square foot guideline can range anywhere from $120 per square foot if you have a pretty builder's grade, pretty basic home, all the way up to $200 to $250 a square foot plus if you have a pretty custom home. So again, we'll have that conversation with you and kind of get a feel for what kind of finishes your home has, and then we can kind of get that dwelling coverage accordingly. So again, we also have a replacement cost estimator that every insurance company needs to use, and it also gives us a general baseline to go off of when it comes to your dwelling coverage. Now, the reason we don't use the value of your home is because your land value is also being factored into that value, and the insurance company is not concerned with your land whatsoever. If something were to happen to your home, there would be no instance, no peril to where we would need to rebuild any part of your land. So again, we're really only concerned with the dwelling itself at this point, and depending on what area you live in Colorado, your land can play a huge role in the value of your home. So hopefully that makes sense. Let's move forward. Next, we're going to talk about other structures. Now, we get a lot of questions on this. People will come to us and say, well, I don't have any other structures on my property. Why would I need other structures coverage? Unfortunately, this comes standard with every homeowner's insurance policy, and surprisingly, it actually encompasses more things than people are aware of. Other structures are any structures on your property that aren't physically attached to the primary structure, which of course, if it was, it'd be covered under your dwelling coverage here. Other structures could include any outhouses, any barns, any sheds. Probably the biggest one we see in Colorado is detached garages. See a lot of those, so that would definitely be included in other structures. Usually this is going to be 10% of your dwelling amount, and that's how we come up with that calculation. Now the beautiful thing about other structures based on your needs is we can definitely increase that. So if you have larger outbuildings on your property, maybe some of them have finishes inside, maybe some of them are heated, we can absolutely increase this coverage based on the needs of the specific client. So definitely can have that conversation with my sales team again to suit your needs. So let's move forward on that, and we'll talk about your personal property. Now, there's a couple of different things that come into play when we're talking about personal property. An easy way to think about this is if you were to turn your home upside down and shake it, All of the things that fall out are your personal property. So your furniture, your TVs, your clothes, actually the appliances in your home are covered under your personal property. This is usually going to be a percentage of your dwelling amount, just like your other structures. Most companies start at 50% of the dwelling amount, but we can usually go up to 70 to 75% depending on the carrier and depending on your needs. So again, we'll have this conversation with our clients. Hey, is that going to be enough personal property or do we need to up that limit? But we'll usually start at 50%. Now, something to think about when it comes to personal property, usually you're going to have limits on your policy when it comes to valuable items, jewelry first, collectibles, firearms, artwork, antiques, things like that that have a special dollar amount value on them. Those are going to need to be scheduled, and that's something that my my sales team is going to discuss with you. We want to schedule those items. The reason being is because it allows you and the insurance company to come up with an agreed value based on an appraisal of that item. So if something were to happen to that item, you already know how much you're going to get. It's not going to be a guessing game with the insurance company to see how much you're going to get for that item. So when you schedule those higher dollar items, you know how much you're going to get. The other two benefits to scheduling your personal property, and probably the most common thing to schedule, is going to be your jewelry, engagement rings, wedding rings, watches. It covers for loss or mysterious disappearance both on and off premise of the home. So hey, you go on vacation, your spouse loses their wedding ring in the sand. Again, if it was scheduled, you're going to be covered for loss or mysterious disappearance. The other benefit to scheduling that property is you're not subject to your policy deductible. So maybe you have a $1,000 policy deductible, but you have some stuff scheduled and you need to put in a claim. You're not going to be subject to that deductible either. So definitely a huge value to schedule that property. And again, you're going to get the full value of that item. Whereas if you didn't schedule them, every policy has specific limits that they'll pay up to for those items. For example, maybe jewelry, your limit might only be $1,000 on your policy, but you might have jewelry that's worth $10,000, $15,000, $20,000 and up. So that's not a suitable coverage for you. You definitely want to schedule those items. Moving on, let's talk about additional living expenses. Now, this is a coverage that is going to allow you, let's say, for example, your home burns to the ground, and the average home through insurance to rebuild takes about 15 to 18 months to rebuild. This is essentially going to pay for you to live somewhere else while your home is unusable. So a peril happens, you can't live in your house, they're going to pay for you to live somewhere else, and it's going to be reciprocal to the way you were living currently. So if you have a $3,000 a month mortgage, they're going to give you about that amount to find a new place to live. All other living expenses that you incurred from not being able to live in your current home are going to be included to that. And this is not a specific dollar limit. Again, it's going to be reciprocal to how you were living currently, but they're going to give you a full 2 years of additional living expenses on this. So that's what that coverage is kind of encompasses as a whole. Let's talk about your personal liability coverage. Probably one of the most overlooked and underquoted coverages in home insurance that we see. And this not only plays a factor in homeowners, but also renters and condo, maybe even more when it comes to those. So your personal liability is any harm you could do to another person or any damage you could do to somebody else's property, both on and off premise of the home. So in layman's terms, it's essentially the only insurance that you can buy to protect you and your family from any damage you could do to somebody else's things or any harm you could do to another person out in the world. It's the only insurance that you can get for this. A couple examples of this: let's say you're going skiing, accidentally put somebody into a tree, they end up suing you for $500,000 because they can't work for 2 years. Your personal liability would kick in and pay for that. Another example that we have actually seen: your child goes over to their friend's house, ends up shooting their friend in the eye with a paintball gun. Now their parents are suing you for a dollar amount. Your personal liability is going to kick in and pay for that. Now we see a lot of times that agents will only quote this at $100,000 or $300,000. We absolutely recommend that you max this coverage out at either $500,000 or $1 million, depending on the carrier. The dollar difference between, say, $100,000 and $500,000 is probably about $25 to $30 for the year, and you can see how much more coverage you're getting. But this can absolutely leave you exposed if your agent does not quote this and explain this correctly to you. Now, going back to my statement about renters and condos, you're in very close proximity to other units when you're renting or in a condo. Let's say you accidentally set your unit on fire and it burns 2 other units. Your personal liability is going to kick in and pay for that. Probably the most important coverage on your renter's policy. So, pretty important coverage there. Let's move forward and we'll talk about medical payments. Again, a very underquoted coverage on a homeowner's policy. A lot of times we'll see a $1,000 limit on this and that's it. Your medical payments is going to cover any guests that you might have that come over to your house that get injured and they found that you were liable based on something that happened in your house. Let's say you have a faulty stair and they fall down your stairs and break their leg and they incur $3,000 of medical payments. You can actually put in a claim for that on your homeowner's insurance and your medical payments is going to pay out before your personal liability kicks in. So this is going to be the first $5,000 there, and pretty important again to max that out. We always recommend $5,000 is usually the most that we can offer on that, and we recommend that. Again, the dollar amount between doing say $1,000 and $5,000 is very minimal when it comes to medical. So, but you just never know what happens when you have people over to your home. So make sure that you're covered there. Moving forward, let's talk about the deductible section of your homeowner's insurance policy. Now, this specific example does not have a deductible on it, and I did that on purpose. Deductibles in Colorado for homeowners are probably the most variable item that we see. We see deductibles across the board, and there's mandatory deductibles right now. Essentially, the deductible is a shared risk between you and the insurance company. So the insurance company is saying, hey, we're holding you responsible for this certain dollar amount. Anything above and beyond that, we'll go ahead and pay. You absolutely need to pay attention to your deductible, not only when you're buying a policy, but every year at renewal, and I'll talk about why in a minute. Basic deductible that I'm sure most people are familiar with is going to be $1,000. That's really the lowest deductible that we'll see being offered at this point. Then we'll see $1,500, $2,000, $2,500 is probably the highest. Some people will go up to a $5,000 or $10,000 deductible, maybe on a higher end home. Then we see percentage deductibles. So we'll see a 0.5%, 1%, 2%, even 3% deductibles. Those are usually mandatory deductibles that some companies are offering to their clients. That's all they have. So let's take, for example, you have a 1% deductible on your homeowner's policy. It's going to be 1% of the dwelling amount here. So if this client has a 1% deductible, they essentially have a $4,000 deductible. Now, a lot of times we find that agents don't explain this properly to the clients. Clients just look at the bottom line, they say, oh, I like the rate, and they move forward. They don't understand what a 1% deductible is until a claim happens. They're upset because it wasn't explained properly. So make sure that you're looking at your quotes and your policies to fully ensure that you understand what you have there. And again, 2%, 3% deductibles. Now, we will also see some policies that have split deductibles. So you'll have an all-peril deductible of $1,000 perhaps, but you'll have a specific wind-hail deductible, which is the most prevalent claim that we pay out in Colorado is wind and hail. You may have a specific wind-hail deductible of a 1%, 2%, 3%. So again, being aware and discussing this with your agent is very important. And if you have any questions whatsoever, call my sales team. They're very knowledgeable. They'll be able to look at your current deck page and kind of let you know what's going on. As I mentioned previously, this not only happens when you're getting a new policy, but we're seeing a lot of companies switching deductibles at renewal. So you may think you've had a $1,000 deductible in the past. You got your renewal paperwork and said, hey, my rate didn't change at all. Great. Moving forward. A lot of times they're changing these deductibles and it'll say in the fine print of your new paperwork, maybe you had 1,000 and they're switching you to 1%. So again, looking at your policies every year and making sure you understand what's going on, having that conversation with your agents is key. We have a full-time service team in-house and we actually welcome you to set an appointment with our service team every year to review your renewal paperwork. So, and of course having 15 carriers that we represent, we're able to reshop. If something happens to one carrier, we have a lot of different options. So we're always competitive with price and coverage, which is nice. Let's move forward from deductibles. So let's talk about packages here. Every carrier has different packages that they offer as part of their homeowners insurance policy. In this specific instance, it's called the Optimum package, but there are 1,000 different names for each package that each carrier will offer their clients. Essentially, what this does is it gives you added coverages that you probably wouldn't think about. Um, for instance, we've got tree and shrub removal. A lot of times they'll pay for lockouts. So let's say you have to change your locks because of a peril happened. Maybe someone broke into your house and stole your house key. You have to get your locks changed. They'll pay for that. A lot of times you can get glass coverage as part of this package. There's a lot of other coverages that are going to be included that, again, you would never really think about. So when you're getting a quote from an insurance company and you see a package on there, make sure you get that breakdown of what's covered under that package so you understand what you're able to use as part of your homeowner's insurance, because a lot of times people don't understand and they waste money by paying out of pocket when they could have actually put in a claim on their homeowner's insurance. So moving forward here, let's talk about extended dwelling coverage. This is a very important coverage on your homeowner's insurance policy. That was a big circle. And this coverage, there's a lot of variations on it based on the company that you go with. Now, extended dwelling coverage is an extended percentage above your dwelling coverage. So this specific client has $402,000 in dwelling coverage, but they also have an extra 50% on top of that. So essentially, they have an extra $201,000 for a total dwelling coverage of $603,000. What this is an extra contingency fund. Let's say, again, your home burns to the ground, and now we find out, hey, there was an increase in building materials and labor. Maybe there was a catastrophe, and building materials are hard to come by and they're expensive. It gives us an extra contingency, again, in this example, $201,000 to make sure that we can rebuild your home the way it was. Now, some companies only offer up to 20% extended dwelling coverage, maybe 25%. All of our carriers offer a minimum of 50% extended dwelling coverage, and we're talking about tens to hundreds of thousands of dollars in extra coverage that you may not be aware you're not getting. Now, additionally, we have 5 or 6 carriers that offer guaranteed replacement, which is the best extended dwelling coverage you can get. Essentially, what that means is they're going to rebuild your home any dollar amount above and beyond the dwelling coverage, no matter what it costs, the way it was. So you can rest assured that with guaranteed replacement cost, you are fully taken care of. And again, your home is fully insured. So definitely ask my sales team about our carriers that offer guaranteed replacement costs. It's an excellent coverage. Moving forward, let's talk about personal property replacement costs. Also a very important coverage on your homeowner's insurance policy. I'm going to tell you why. This covers not only your personal property, but this also covers your roof, which is probably the most important piece of personal property replacement costs. But let's talk about your actual personal property first. So when you have this endorsement on your policy, let's take a flat screen TV example. And what you have here is you have replacement cost versus actual cash value. You're going to have one or the other. So again, let's say you have a 5-year-old flat screen TV and you're covered at replacement cost. Let's say someone breaks in and steals your TV. The insurance company with replacement costs is going to give you the newest model of that TV, no questions asked, and that's what you would want. With actual cash value, they're going to depreciate the value of that TV by how old it is. So 5-year-old TV, they may give you $200 and say have a nice day with actual cash value. Now let's go back to what I was talking about before. This is very, very key when it comes to roofs. And we see this a lot in the market now that people are only offering actual cash value on roofs. Let's say you have a 15-year-old roof that costs $20,000 to replace. Hailstorm comes in, the insurance company comes out and says, hey, yeah, you need a new roof. What's going to happen is if you're covered at replacement costs, they're going to pay the $20,000 minus your deductible, no questions asked, and you're going to get a new roof. When it comes to actual cash value, they're going to take the age of that roof. So let's say, again, it's a 15-year-old roof, $20,000 to replace. It leaves them a lot of gray area to depreciate that roof down 15 years. They may cut you a check for $4,000, then minus your deductible, and you're really self-insuring most of your roof. It can cost you thousands and thousands of dollars if you don't understand whether you have replacement cost versus actual cash value. So again, another conversation that you can have with my sales team and we're very knowledgeable. We can look over your current declarations page and point that out for you, kind of mitigate that potential financial loss for you. So moving forward, let's talk about building ordinance or law coverage. Now, as you can see in this example, it's covered at 10%. That's a pretty typical coverage for or percentage for this coverage. Usually we'll see anywhere from 10 to 20%, and that's of the dwelling amount, just like other structures of personal property. What this is, and I'll give you a couple examples. So let's say the city comes in and says, hey, your fence needs to be moved back. We're buying the land behind your house, and we found that you're on the land. We need you to move your fence back 2 feet. You're actually building ordinance of law coverage would pay for you to have to move that fence. So pretty important. Let's take another example. Let's say you have a 1940s home and it burns to the ground. Let's say you had old plumbing, old wiring, it wasn't up to code. Well, again, the insurance company wants to build that home the way it was, but they're not going to put in the old plumbing and old wiring. They need to bring it up to code. So this building ordinance of law coverage would provide an extra percentage of the dwelling amount to be able to bring that plumbing, that electrical up to code. So pretty important coverage, especially if you have an older home. Let's move forward. Talk about sewer and water backup. Pretty important coverage, and we see this misquoted a lot when it comes to insurance. So essentially what this is covering is, let's say the sewer line from the house to the street backs up and it brings water into your home. This happens more than you think. It's actually a pretty common claim. This is a specific endorsement that needs to be added to a homeowner's insurance policy. It's not a normal peril that's going to be covered, and it's covered up to a specific limit. Now, this is a conversation that my sales team is going to be having with you, the client, to make sure that we cover you properly. If you have a finished basement, this coverage could be upwards of $10, $15, $20, $25,000 depending on how big your basement is and the quality of the finishes. If you don't have a finished basement and there's not a lot of personal property down there, you'll probably be okay with $5,000 or $10,000 worth of coverage here. But this can absolutely be a messy peril to clean up and expensive. You want to make sure that you understand, A, if you even have water and sewer backup, and B, what the limit is. Also, we'll see some carriers that will add specific deductibles to this coverage. So you need to make sure that you're looking at your policy and understand, hey, I have a separate deductible for my water sewer backup. Pretty important there. Moving forward, lastly, let's talk about loss assessment coverage. This coverage comes into play if you live in a condominium complex or if you live in a complex that has a homeowners association. So let's use our condo example first. Let's say that the homeowners association for the condo complex, let's say they have a roof claim and they need to pay the deductible on the roof claim. What they'll do is they'll assess a fine to every homeowner that lives in the condo building to pay for that deductible. So let's say you have a $3,000 loss assessment. This loss assessment coverage is going to cover you for that. So you can actually put that claim in under your homeowner's insurance, and they're going to cover that loss assessment for you. Same example, if you live in a community that has a homeowners association, regular standalone home. Let's say you have a neighborhood pool, and the neighborhood pool gets vandalized. And so the homeowners association assesses a fine to every homeowner in the neighborhood to pay for that damage. Again, same situation, you can put in a claim on your homeowner's policy to pay for that loss assessment charge that you might be getting. So again, another important coverage that you may not think about that's on your homeowner's insurance policy, and we want to make sure it gets quoted correctly. That is pretty much a basic rundown of coverages that are going to be on your homeowner's insurance policy. Obviously, there'll be extra coverages here and there, but again, most of them are going to be on that package that's added to your policy if you have one. But again, if you have any questions whatsoever and you want us to look at your current declarations page, or you just want us to run down the quote that we're providing for you, please call my sales team at 720-283-1722. I appreciate you watching our home tutorial, and we hope to talk to you soon.